How's it going, fam? We are back on another lesson. Mauricio with you guys, and today is February 17th. I want to go ahead and walk you guys through as far as how it is that I took this trade and how is that you guys could have taken advantage of it. Now, understand that we spoke about, a couple things in the past as far as finding a point of interest and also the time that you want to be trading. So now let's put those two things together. And then the next lesson that you will see will be as far as a little bit more confirmations as far as the entry. Okay, so bear with me, guys. I'm doing the best I can to provide you guys as much information as possible. So please do me a favor and gently hit that smash button. Gently smash that like button so that way I can go ahead and see that I am doing my best to give you guys as much information as possible. Okay, so right here, I want you guys to take this in consideration. We are on the 4-hour time frame, and as you guys can see on the 4-hour time frame, we've been having bearish moves, right? We've been having some really good bearish moves. Now, we were looking for potential bearish moves in this area, in this zone. However, we need to understand what order flow is, and that's going to be one of the things that we're going to be talking about next lesson. We're going to be talking about next lesson. We'll be talking about order flow, and a complex pullback. Okay, we'll be talking about those two specific things on the next lesson, but for now, bear with me because I will be using these two words right now, but on the next lesson, you guys will know exactly what they mean and how is that you can use them properly. So in this area right here, we're seeing that market was creating us the overall movement to the downside. We are overall bearish. Now, however, this retracement to the upside, we wanted to make sure that it came to an order flow area, which in this case, it clearly did come to order flow. And we like to go ahead and round up our numbers to the nearest 25, 50, or whole number. In this case, we'd do it to 25 or even the whole number. Okay. Now, taking into consideration point of interest and next case scenario would be the time that we trade at. Remember, we went through this on the last session. If you did not see the last session, I recommend you guys to go through it so that way you guys can fully comprehend how it is that you can gain these snipe entries. Now, we were able to identify this. We're able to identify that market had created liquidity. Awesome. Great. And this liquidity was created around 5. And then over here, coming towards 8 o'clock, we saw that volatility, okay, that pressure to the upside coming into what? Coming into this level that I had mentioned, which is a point of interest on the 4-hour time frame. Okay. Now that we found that, let's go ahead and start correlating things. Let's start putting things together, right? We're able to see that point of interest, which is correlated with our 425 level. And when it tapped into there, this does not mean for you to enter. Can you enter? Of course, you can enter on that trade. However, your stop loss on this trade would be right above over here. I want to be able to be more precise. So therefore, I want to be able to get on smaller entries on lower time frames, such as the 1-minute time frame. On the 1-minute time frame, we're going to be looking for exact same schematics. And right here, we can see perfect scenario. We see liquidity. We see the market take out that liquidity right over here, and at the same time creating us a big pocket of money down below over here. Therefore, I know that market had broken previous structure in this area for market to then later on come back up into our next point of interest, which would be the level that we'd be taking consideration right over here. Okay, now many individuals would be going into the round number, in this case right there, 7,400. That would be the entry for a stop loss right above our point of interest. Stop loss right above our point of interest, leading us for a 6-pip stop loss. And our take profit, understand that this is based off of the 4 hours, so we are going to go ahead and look for take profit all the way down into the lows. We want to take it all the way down to the lows. In this case scenario, let me go ahead and just erase these things real quick. Go back to 1 minute real quick. We're going to take it all the way down to the lows. We want to take into consideration the 1 hour first for our first TP. First TP is going to be the low of that 1 hour. So in that case, we'll be right here for a 1 and 10. And then all the way lows over here, leading us for a 1 to 20 risk to reward ratio. I hope you guys enjoy this quick little lesson. Hope you guys were able to learn some stuff. Next session, I will talk about the complex pullback and order flow. Please do me a favor. Make sure to go ahead and like and comment below what it is that you'd like to see next. But for now, gently hit that smash button, and I'll see you guys next time. Bye-bye.